Hi, my name is Andy and you're watching Andy's Fire Club. So today we're going through the 5 stocks that I'm buying in this great market crash of March 2020. Now, holy smokes guys, things have changed since the last time we talked. I'm still in quarantine, as you can see in my humble abode. Welcome. And I think this was the second biggest drop ever in terms of percentage drop. So the Dow Jones dropped, I think, almost 13%. And it's the biggest drop ever in terms of absolute point drop. So holy smokes, guys, we're living in a history textbook now, literally. So this will be the time that you tell your kids about later in like 10 years and you say that, wow, like I've lived through this, right? So the way that I've been dealing with it is just I've been making memes. So I have this group chat with friends and then we just share memes, and that's the only way I know how to deal with it. I mean, these days I'm stuck inside anyways, right? So there's nothing else for me to do. So I'll put up some of the memes that I've made. You can see them and I think they're pretty funny. So if you want more of them, be sure to follow me on Twitter and Instagram. I'll leave the links down below in the description. So as some of you know, I work in the financial industry. So I'm a research analyst for this small startup based in Toronto. And we do stock analysis and earnings report analysis and all this stuff. And a lot of the people that I work with, a lot of my coworkers, they've all been through the 2008, 2009 financial crisis, and they were working in the financial industry at the time. And some of them have even lived through the 2001, 2000 dot-com bubble and the recession that sort of followed, and 9/11 and all that stuff that happened. And even they tell me that they have never seen anything like this. This is truly like unprecedented. So if you look at the stocks that we're going to mention today, you would not have imagined just a few months ago that these stocks would hit these prices like ever again. So I think that there's so many great deals out there on the stock market. You can just about throw a dart at a list of stocks and still make money. But here on this channel, I think for my investing strategy personally, I like to pick some stocks, and I think these 5 are the main ones that I want to focus on for now. And these are the ones that I'll be buying more and more heavily as they go down even further. And as a famous philosopher once said, chaos is a ladder. So if you're looking for an opportunity to really magnify your wealth in a significant way, this is your opportunity. So before I begin, I just want to have a little disclaimer. Although I do work in the financial industry, I'm a researcher and I'm not a financial advisor. So please do your own research and don't just copy my portfolio. So I won't be responsible if you lose money. This is not proper financial advice. If you want proper financial advice, please speak to your financial advisor who can give you a recommendation based on your personal circumstance. This is just some guy on YouTube. So don't just do exactly as I say. Always do your own research. So without further ado, let's jump in. So number 1 stock I'm buying is of course Tesla. So I'm sure a lot of you are excited to hear me talk about Tesla. It's one of the most talked about stocks here on YouTube and just in general actually. So I'll make a separate video probably at some point talking about my bullish thesis on Tesla and why I think that this company has so much more potential that's still unrealized. But this recent market crash has given me an opportunity to get back into Tesla because stupid me, I sold Tesla when it hit $700 and it ended up going to like 900. And then I was like, I shouldn't have sold it, and I regretted my decision. And I never got back in because the price shot up, I think, to like 950 or 960 at one point. And then I've just been looking for an opportunity to get back into the stock. And you know what? Recently, with the market crashing, it's actually crashed back down to around $450. So it's finally given me an opportunity to get back into this stock. So I'm glad that that's happened. And I've been slowly buying my way back in to the shares that I sold. So I've actually made a little bit of profit because I sold at like around 700-ish, so I can buy back at a lower price. The reason why I'm so bullish on Tesla is that if you look at what Tesla's doing in the industry in terms of an automaker, it's really an automaker and a tech company combined together, in my opinion. And if you look at the EBITDA growth of Tesla, it's absolutely amazing. It's over the past 3 years, it's gone up 270% on a 3-year basis. And if you compare that to a lot of the other manufacturers like GM or Ford, their EBITDA is either flat or they're declining. And if you move on to revenue, it's sort of the same story. So if you look at Tesla's revenue growth over the past 3 years, you can see that the revenue has gone up above 180% on a 3-year basis, versus if you look at the automaker, it's the same story. Their revenues are either flat or declining. So again, I'll talk about Tesla in a separate video in more detail, but for the time being, just keep in mind all the other aspects of Tesla's business that they're still in. So you got Tesla's energy business, their solar roofs, their battery technology. So Tesla's autonomous driving is so much more advanced than anything else that you can get on the market, in my opinion. And they're easily 5 years ahead of the competition. So if you look at the advantage that Tesla has over the competition, that the growth potential is just enormous. And with the recent drop in price, the forward PE ratio has actually come down into the mid-30s range, which I think is pretty reasonable for a company such as Tesla. So that's number one. Now let's move on to stock number two. Now, stock number two is MasterCard, ticker symbol MA. And the reason why I chose MasterCard is I think that the world is moving more and more into cashless payments. So paying with cash is a pain, right? You gotta get change, and then you get all these coins and you have nowhere to put these coins. I have some coins back here and I put them in these little roller things, right? And then you lose them and it's just a pain. So you don't want to be doing that. And if you have a card, then you can just, obviously, you guys know how to use a credit card. I'm not gonna tell you how to use a credit card, but you can see the appeal of something like a MasterCard. Whenever you tap or swipe a card, a MasterCard handles the payment network and they charge the merchant a small processing fee to process that payment. The way I see it, the world's only going to go more cashless and not less. And if you look at MasterCard, if you look at their revenue growth, over the past 3 years, they've grown revenues by over 50%, which is pretty impressive. They also have over $7.6 billion on their balance sheet in cash. And if we do slide into a recession, I think that will help them a long way into weathering the storm. And overall, MasterCard, since they're not the ones that are originating the loan, meaning that when you swipe a credit card, the bank is the one that loans you the money. So if you default, then that's the bank's money that's on the line. MasterCard simply handles the transactions. So even though they're involved in the credit card industry, they're not exposed to the credit default risk, which is taken on by the bank or by the issuer of the credit card. And MasterCard is only the network that handles it. So if you think from a business and customer point of view, MasterCard just sits in the middle as sort of a middleman, and they just collect money basically, right? When the transaction goes through, and they don't have to take on any of the risk of lending money through a credit card because they just process the payment. So that's why I want to pick up some shares of MasterCard, and obviously with this recent crash, the price has come down. So I think today, after the second biggest drop in US stock market history, MasterCard closed at around $235 per share, which is a pretty reasonable price for this stock, I think. And I'll definitely be interested in picking up some shares later on, especially if it crashes more. And the third stock I'm buying is Air Canada. So the reason why I chose Air Canada is because this stock has been absolutely destroyed by the recent virus outbreak. And as I'm sure some of you are aware, no one is traveling right now, right? So who the hell is going to an airport and getting on a plane these days? No one's going to air travel. So obviously Air Canada's stock has been absolutely battered. And today, the Prime Minister of Canada, Justin Trudeau, he just announced a flight ban of foreign nationals coming into Canada. So if you're not a Canadian citizen or a permanent resident, then you're not allowed to enter into the country at all for the time being. So that'll definitely have a big impact on Air Canada. And furthermore, international air travel is restricted to only 4 airports, being Toronto, Montreal, Vancouver, and Calgary. So only those 4 airports can have international flights for the time being as well. So the situation's just gonna get a little bit worse from here before it gets better. So I don't see Air Canada stock really doing that well in the short term. But again, I'm in this for the long term, right? So I'm just going to average down my cost basis and hold for the long term. And the reason why I'm so confident in Air Canada is that if you look at their balance sheet, they do have $5.9 billion in cash on their balance sheet. And their forward PE after this huge price crash of their stock has come down to pretty ridiculous levels. They're trading at a forward PE of 3.55. So If you know anything about valuating a company, that's a really low price multiple to be paying for any company. So the market is almost pricing this stock like if it's about to go bankrupt. But I don't think that Air Canada will actually go bankrupt because, face it, they're the only major Canadian airline, and the government will probably bail them out if they actually ever came close to actually becoming bankrupt. So I feel pretty confident in picking up shares of Air Canada, and I'd definitely be more interested in picking up even more shares if the price continues to crash. So today it closed at around $18 Canadian. So if it crashes down to 15, then I'll buy some more. And I think if it crashes even further, I'll further average down my cost basis. Now for stock number 4, I chose Microsoft. Now, why did I choose Microsoft? Well, Microsoft is one of the best tech companies in the world, I think. And the old is truly cool again. So everyone thinks that Microsoft is, that old dog that can't learn new tricks, that's old school, that's lame. Well, no, not anymore. Microsoft's come back from the dead. In fact, I like to call Microsoft the king of self-reinvention and self-disruption because I think that their comeback story is pretty amazing. And I think that the CEO, Satya Nadella, is one of the best CEOs ever to exist. So he saved the company and he brought Microsoft back from the dead and he made Microsoft cool again. And the reason why I'm saying this is because of Microsoft's cloud platform, which is called Azure or Azure. I'm not sure exactly how to pronounce it. So Azure has been gaining market share at a pretty fast pace. So if you look at their market share back in Q4 of 2017, they were around 13.7% according to Statista. And that increased to 17.6% market share by the time that Q4 of 2019 rolled around. So if you look at Microsoft's main competitor, which is Amazon Web Services, their market share has remained relatively flat throughout the past few years, and they've experienced not that much growth, while Microsoft has gained a lot of market share and grown rapidly. So I think Microsoft is really up and coming in the cloud space, and their market share might get even bigger as time goes on. And obviously, with the whole outbreak and the whole economic crisis and the stock market crash, Microsoft's stock has been dragged down. But I don't think that any of this, all of this is just macroeconomic, right? None of this has to do with Microsoft specifically. And I think Microsoft is just being caught in the fray and their stock has been dragged down. So right now their stock is trading at $135 per share-ish, while they were approaching $200 a share before all this happened. So I think at these levels, you're getting a very good deal on Microsoft stock, which is why I'm going to be buying Microsoft stock pretty heavily throughout the next few weeks or month if it continues to crash. And lastly, stock number 5, I chose Carnival Cruise, CCL. Now, this is more of a risky bet. So obviously, cruise stocks are the worst hit out of the entire stock market because of the outbreak. And if you look at a price chart of Carnival Cruise stock, ticker symbol CCL, it's been absolutely destroyed over the past few weeks. This used to be a $50 stock before all of this happened, and now it's plummeted all the way back down to around $14 a share. Now, the reason why I'm so interested in this stock is I think that eventually the cruise numbers will bounce back up. So if you look at the long-term trends of people taking cruises, it's been going up pretty consistently for the past few years. And if it wasn't for this whole virus outbreak, it would keep going up. But obviously in the short term, no one's taking cruises, right? You'd have to be crazy to take a cruise right now. But once this virus thing blows over, even though the stock rebounds to half of where it was before, I'd still be making money. And if they manage to keep their dividend in the short term, I know the dividend yield looks like it's at like 11% or something, but it's highly likely that they will cut it or they will just eliminate it completely. So don't expect to actually get 11% anytime soon. But eventually, if they reinstate the dividend and I got in at say like $14 a share, then that will be such a great price and my yield will be a lot higher. Now, taking a look at CCL's balance sheet, it does look concerning that their current ratio looks very low. So if you don't know what a current ratio is, current liabilities and current assets are assets that are able to be turned into cash within a short amount of time. And current liabilities are debts that need to be paid in a short amount of time. So the reason why the current ratio is useful is that it evaluates a company's ability to pay back its debts that are coming due very soon. So a current ratio of 1 or above is usually what you want to see, because that means that the company has enough cash to actually be able to pay all its debts that are coming due very soon. Now, if you look at Carnival Cruise's current ratio, it looks like it's very low, but that's because of an accounting thing. So in accounting, they actually record customer deposits as a liability. So it actually gets recorded as a liability, even though if you think about it from a practical standpoint, if you give Carnival Cruise money as a deposit, then that's cash that they could have access to, right? And that's at least not a liability that would weigh on them anytime soon, right? Because they didn't have that cash before. You just gave it to them and they could just give it back. But from an accounting standpoint, it does count as a liability, which is why it's recorded as a liability, which makes a current ratio look really bad. So if you look at Carnival Cruise's latest earnings report from Q4 2019, you would see that they have $4.7 billion in customer deposits. Now, if you take that out of the calculation, then the current ratio is actually above 0.5, which is still not the best, but it's definitely a lot better than the 0.2 or something that you see on Yahoo Finance. Anyways, I guess the point that I'm trying to get at is I think maybe this stock has been being down too hard, and I just want to put some money down into it now at these levels, and these levels are really attractive to me. So I think in the long term, I think I will make a decent return on that. So yeah, anyways, those are the 5 stocks that I'm buying. Leave down in the comments below if you have some suggestions on what you're buying and if you're taking advantage of this dip at all. So I'd love to hear what you want to say. And just a word of advice, I know that it's tempting to dump all your money into the stock market now because everything seems so cheap. Well, everything is pretty cheap, but you always have to keep in mind that things could get worse, right? So I would recommend you buy things very slowly. So if the stock market crashes even more, it just crashed 10% last week, and then it crashed another almost 13% today. So it could crash another 10% tomorrow or next week from now. And you never know. So you don't want to commit 100% of your money at once, because then you just lock yourself in at that level. And if you miss the bottom, well, then you're going to suffer that big drop. So I know I named 5 stocks, which seems like a lot, but I'm just slowly nibbling away at each one of them. And I'm not going to YOLO all my life savings into all of them at once or something like that. So that's not a good strategy, right? So you want to average down your cost. Just make sure that you keep some cash on the side and don't just YOLO your life savings out all at once. Well, I think that about wraps it up for today. I'm excited to see what the market is going to be like tomorrow, because I'm recording this on Monday night right after the crash. So we'll see where the market goes for the remainder of the week. In the meantime, everybody stay safe. If you're in quarantine, just make sure you wash your hands, make sure you social distance yourself from other people so that you don't get the coronavirus, and don't touch your face. Be sure to give a thumbs up if you like this video, and consider subscribing if you like this series. Anyways, I'll see you guys in the next video. Thanks for watching.